I recently spotted something massive forming in the utility sector. The same cup and handle pattern that led to NVIDIA's 200% move and AppLovin's 350% moves is showing up again. And this time it's not just in one stock, but in multiple leaders of this breakout group. When you've been studying charts and institutional patterns like I have for the last half of a decade, you start to recognize the same exact setups that lead to massive moves. I spend a lot of my time analyzing these base patterns and looking for specific formations like multi-month bases on bases. These normally lead to very huge moves for both investors and active swing traders. I look for volume dry-ups at key levels and most importantly, cup and handle patterns in sector leaders. And what is very exciting is that right now I'm seeing a group of utility stocks forming these exact patterns. And remember, when a sector starts moving, the best stock normally will move 60% much better than the laggards. Our job as investors is to find this best stock and heap our money into it. In this video, we'll go through each of the stocks' technical structure and rank them from best to worst. But before I share these setups, make sure to grab my free newsletter where you'll get my most profitable stock investment strategy. Just click the link in the description to sign up. These videos are mostly examples of how we use that technical knowledge, but if you want to understand the whole system, it's on the resources page when you sign up for the newsletter. The first stock that we'll look into is called CEG. So how do we find these sectors in the first place? The first thing that you have to know is that stocks normally follow their industry. So here I have an industry chart. That's a SMCI industry, and then I have a stock chart. So normally what happens is that every time a stock has these huge swings up, the industry is already going up. You see this huge move in SMCI, industry was going up as well. We can see that in NVDA as well. Whenever NVIDIA has these great moves, the industry was trending up. When the industry was going down, NVIDIA was struggling. So stocks normally move in their industries, and our job is to find the best stock in those industries. It's actually a very simple formula. Find moving industries, find industries with a good technical setup. The second step is finding the best stocks in those industries for either swing trading or investing. Then after you found the stocks, do you see a good technical pattern where you can get in? The first one is CEG. This is the weekly chart. We like to look at 2 time frames, never look at 1 time frame. To know that the industry is going up, we just look at the CEG industry. This is independent power. You can see that this industry has been ripping it. The industry is going up. And what happened to CEG? Currently from 2023, it has done 330%. Your money would have multiplied times 4. If you put in 10,000, you'd already had 40,000 by now. That's how big these moves can get when you get the correct industry moves. So this particular industry is where it's at, and we're looking at the stocks in an industry and trying to see which is the best, which one can we get into. And CEG is one of them. This one, first of all, is the last in the group. So it's the least recommended that I would buy. Why? Compared to others, it is not showing an easy technical pattern. In CEG, on the daily chart, we see this inverted cup and handle. Okay, so it gaps up. It doesn't cover this gap. That's the first good sign. But I don't like these gap ups and down. That's why I don't like this stock. I don't like stocks that gap up and down like this. They're not nice to hold as an investor. But what we are seeing is a multi-month breakout, which is nice. You see this inverted cup and handle from this consolidation. So we are seeing a base on a base, and it's happening over several weeks. So whenever stocks coil up like this, when they spring out, it's just huge. And what are we seeing on this huge gap up here? It's on very, very huge volume, and it's going to all-time highs. Whenever stock is going to all-time highs, that's also a very good sign because people are not willing to sell. But yeah, so this is the fourth in the group. I'm going to show you 4 stocks today, and this is ranked number 4. The next one that I really, really like is GEV in the same sector. So if we look on the weekly chart, it's an IPO, forms this multi-week breakout, and then it goes up. Of course, you could have gotten some really good money on this one. It went up about 90%. So if you put in your money, you just doubled it, put in $10,000 here, you have $20,000 by now. And what happened? So we see it forming this very flat base. The base is very nice because it is tight. So these are technical patterns that we're looking for. It's only an 8% correction. So the smaller the correction, the better the sign. And then we see something very nice here called a shakeout. So what happens is that it comes and shakes out this prior low. Nice, very good action. Forms this chit on very low volume. Look at the volume during this chit, and then it goes up here. That's when I issue the buy to people in the newsletter. I got in around 368. So the stop is down here, and currently we are profiting. So of course, if you want to be getting these alerts, sign up for the newsletter. You'll be getting these alerts on time. Right now, I would say it's overextended. It forms this nice chit, pulls back, and I added again to my position. So I multiplied my position times 1.5 once I saw this pull back to the breakout level. This is something we can expect to see. And then it is moving up now. Now, of course, around earnings, I'm waiting to see what it's going to do. Since it's an IPO, I don't think it's going to be crazy. But look at the volume on the breakout. That is very nice. And this is my third choice. The reason why this is a third choice is that this is a very nice base 2. Base 1 and base 2 are the most trustworthy. So these are the best times to buy as an investor. When it starts to form base 3, base 4, those are times when the stock is about to fall. So we see those very nice technical patterns, and that was also a very, very good buy. Now the next ones, I think you can still get in. That's why it gets a little bit more interesting. The next one that I really like is, and let's see what it did since 2023. My God. Went up 140%. So you could have got in that 1 year. Last year you got 113% return on this stock. So we see that very huge monthly move, and then it starts to consolidate. And now this looks very ugly, but for me, I see some beauty in this pattern. And what am I seeing? We see a very nice cup and handle here. It fails to break out, right? And then it forms a base on a base. So let's look at the weekly chart. What are we seeing here on the weekly chart? Let's watch closely. So we see this cup and handle. We like to see our time frames just right next to each other. And then it tries to go out, returns to the breakout level, right? Tries to go up again, fails, return to the breakout level. So whenever you see this coiling of stocks and it has refused to come down anyway, just know it's about to spring up. And then this last, I issued a buy alert here because I thought it was going to break out and rip out, but we see what happens. It just collapsed, and then you could have been stopped out. So you're only going to lose about 1% of your account. This is how investing works. This is how trading works. Sometimes you're going to win, sometimes you're going to lose. So I was stopped out here, but the good sign is that you see it didn't break structure. It really was just kind of more like a shakeout. It didn't break it here. It just came, shook us out, which is what, because these big traders knew what we're doing, put our stops here, and then it starts to form a good technical pattern again. Here we are seeing also a nice cup and handle. See that? We see a lot shit here. This is the first sign where we can maybe try to pile into the stock. So maybe I could have bought a third here. You see volume dry up in this chit. Whenever you see volume dry up, it means people are not willing to sell. That's a very good sign. Comes up, forms a mid chit or a handle here, and then it jumps out, and we can see some really good volume as well. So that's why I say this is still a good buy. You could actually just buy here, put the stop right below the break of the structure. I would probably put my stop about 8%, 9%. And then we wait to see what's going to happen to this thing. But I think this thing could rip. And the reason I think it's going to rip is because the other stocks can tell us that the industry has already started moving. So we can see GEV already moved. SEG already moved. So that one is just waiting to move. These are all going to all-time highs. That's how we can be very sure of our purchase. Now, VST is the really good one. First of all, I like this one. The return on equity is great. We like to see above 17. This is 29. So we see our multi-month kind of inverted head and shoulders, as we also in the other stocks. All the stocks share very similar patterns because they're in the same industry. So we see it here. Okay, that's the first good sign. So a very smart investor could have actually piled in here at 87. Then it forms a base here, and this is very good. Breaks out again, forms a base on base. So basically, it has been coiling up as well, but you can see its coiling is not the same as NRG. NRG has been coiling back to the original breakout level, right, which is about $86. And now it has gone to all-time highs. And by the way, one thing I also forgot to say is that this thing broke the rule of 100. Whenever stocks fail around the 100 level, they normally reverse. But when they pass through, they will rip above. So VST, you can see it has also been pulling back, but for it has higher lows. And a base on base is a very, very strong signal. Because that means the stock is coiling. Once it breaks out, it's just going to explode. It can lead to such big moves. Because last year, let's see what this thing did from 2023. I don't even want to show you. You're going to feel bad. 282%. So literally, your money would have gone up times 3. But anyway, I recommended it as a buy already in the newsletter. So investors have already been profiting off of this one. You can see the trade recommendation here. I recommended it, so people are still bullish on this one. So if you want to get this service, just sign up. I'm still holding this one, and I added to my position again after it came, consolidated, formed this chit here. I can see this very nice chit. It has volume dry up, jumps out on a little bit of volume. I like that. This is like a mini inverted head and shoulders. You see this big one, and then this one is like a replica of that. Isn't that quite interesting? And then now it forms also like the cup and handle. So you have to know these patterns. This should be like basic patterns. And they're all for free on a newsletter. So make sure you really study that stuff. And then it breaks out on that shit. So that's where I'm getting a lot of my confidence from. The problem is that I'm not seeing that very heavy, disgusting volume that we like to see. You like to see very, very heavy volume, right? So we can see it here in the chit, 69%. We like to see above 50%. Like on this day, it had 258% increase in volume. I hope you've learned those technical patterns that I was trying to teach you. But remember, the bigger picture is looking at the industry. then finding the best stocks in the industry, then looking for these good technical patterns and being patient. Because you see, I already saw this thing. I first saw it here in September. So you see, all this time I've been waiting. So to get these really huge returns, sometimes you have to be watching. And once it rips out, pile your money in, and you're going to make a huge return. But a lot of the time, you're either watching, waiting for it to set up. That's the first task. Or you are already in the stock and you're just sitting and waiting to see what happens. And that is what I'm currently doing in VST. I personally have loaded up on VST and NRG. I do have GEV as well, but this is a swing trade. Because I saw this industry moving up, I just piled into multiple stocks in there. I hope you found value in this video. If you liked it, please subscribe to the channel, and may the markets be with you.